Hey traders, Nick Shaheen here looking at Home Depot. They reported earnings. I'm assuming they met or beat. Doesn't matter. The reaction after the earnings on the headline, knee jerk, is completely binary. No one can tell which way they're going to go. I know what you're thinking. I'm a moron for saying it. But I bet you anything that even if you ask the CEO to give you the financials ahead of time, you couldn't guess it any better than a coin flip. Look back in history and you'll see that. The knee jerk reaction is purely based on expectations. How good are the forecasters? They're horrible. So I don't know what they're expecting. I don't know what the company's saying. It's like a double coin flip. So why bother guessing? It's better to set the trades after the fact, which is what's going on here. So the question came to me was, what do you think of a debit call spread for December? I think it was at 285, 290. I don't mind it. For one simple reason. It's falling into support, and I'll show you my lines in a little bit. But I don't have a specific trigger other than that, except that it's falling into support. So tomorrow, to add a twist, is Lowe's earnings, and they move in sympathy. So let me test that theory. What did Lowe's do today? Okay, it's down a little bit, not as much. So it does lend to the idea that if Lowe's pops, this will pop. If Lowe's falls, this might fall. The problem with that is that it needs to hold 269 or it's going to test 262. And if it loses 262, then 245-ish, 250 is the next level where it should find support. It would be like a head and shoulder-ish, a lost neckline of sorts that will overshoot lower. It's a good stock. I don't know how cheap it is. I haven't looked at it from that perspective. Let's check it. This is Benzinga's tool. It's pretty good. It's somewhat expensive, but it is comprehensive. So it's not expensive at all. It's two and a half times price to sales. Trailing. So there's only 2.5 years worth of its sales built into the stock price currently. That's pretty dang low. And the PE is 25. So it's not expensive. So there's no reason for it to fall based on the fundamentals, but from the stock, from the chart, and the overall market sentiment in the market is as high as it was in October when we saw this dip. And this wasn't problems with Home Depot; it was problems with the whole market. Let's test that theory. Boom. Okay, so that where sentiment was an 8.0 on a scale of 1 to 10, actually 8.5, I think. Today, 8.2 this morning after yesterday's pop. Today's action not built into it. So I'm interested to see what sentiments look like tomorrow. But from that perspective, there's still a coin flippish outcome tomorrow based on sympathy move with Lowe's. Other than that, I don't mind it. I would prefer selling put spreads on a bad day like today. Bad in quotes, down 2.5% is the new correction. And from that perspective, I wouldn't mind starting out with a credit put spread, a bull put spread, banking, capitalizing on others' fears. When everybody else is jumping out, you look and you see where there's support and you sell risk where there's support. That's where the quote, easy money is made. Because if other people are panicking, you're acting based on your own information, not based on any fear. You're actually trying to capitalize on the fear. So, let's put the lines. So these are my lines on it. I did not update them today. These were my lines from before. It's literally inside the word of support that I had on my chart. Failed at resistance. And there's a tight range where I expected either an outcome here or a test of the low, but I didn't trace it lower like I should have put it here. But if I wanted to add one line, I would add it here. So you can see how it is. So maybe this brings us to here. But the problem is if it does bring us to here, it might bring us to here. So now it's lopsided, so I'll fix it. But you see the logic? I'm not calling for this, but I'm saying that if we lose footing, there might be a second leg lower. And what if the market in general puts some extrinsic pressure, downside pressure on it? Itself, we just looked, fundamentally it has no reason to fall. But it has the potential to fall based on 1, Lowe's tomorrow. Today is the 17th of November. 2, markets in general. Are you seeing what the small caps are doing? This is freaking amazing. But I may see some divergences inside the index. So I'm not sure if it's a pent-up demand because the small caps have not set an all-time high since 2018, and they just did. So they spent 2 years building up for it. They want to milk it, but sentiment is so high already, and that's the only variable in the market. So all by itself, I do like it. I would probably take more time for me to be right. So if I'm buying shares, I'm probably more okay with that than buying calls. I'm more okay in buying call spreads than calls, and definitely not okay with them being short term because there's no immediate catalyst for the upside, in my opinion, other than the fact that it's falling into support. All right, these are my 2 cents on Home Depot. Nothing here is a recommendation to buy or sell. This is my own personal opinion based on non-Wall Street or chart reading techniques. Woo, that's a long disclaimer.